Hi, it's Edward, back with another video. Please take a moment to click the thumbs up button below and consider subscribing to the channel. Please also share this video with your friends. Thank you for your support. Today, I read several financial news articles. I've included links to the articles in the description below. I encourage you to read the articles to support the authors and news sources. As a private American citizen, I'd like to report and share my transformative thoughts through commentary regarding small sections of these articles that are of public interest. Today, I read an article on newsnationnow.com written by Xavier Walton titled, "Americans Taking on More Credit Card Debt Amid Inflation." According to the author, American consumers are continuing to spend, with many opting to pay with credit cards as they grapple with inflation and maintaining lifestyles. The author went on to say, nationally, credit card spending rose in the third quarter at major banks, including 9% at JP Morgan Chase, the nation's largest bank, and 15% at Wells Fargo. Ladies and gentlemen, when I read this, I had to wonder what these big banks are doing to mitigate risk. Large numbers of people that they extend credit to could struggle to pay back their debt in the future, especially if the economy takes a turn for the worst at some point. Many of the super banks got bailed out during the 2008 Great Financial Crisis. I'm sure some of you will say the government will simply do that again if they get into trouble. And maybe you'd be right, but who knows for sure? If all of this information from this article isn't disturbing enough, the author said Americans are resorting to using credit cards for essentials, including food and college tuition. Ladies and gentlemen, I hate to hear about this situation happening here in America. I worry about these people who are struggling to afford life as we know it, and they are resorting to credit cards to survive. Given the high level of interest being charged by credit card companies these days, some of these Americans could get into some serious debt and struggle financially even more in the future. At some point, this could become unsustainable. The author of this article went on to quote Lynette Kalfani Cox, the author of Bounce Back, The Ultimate Guide to Financial Resilience, as saying, "We've seen a lot of data showing that some people are either taking emergency or hardship loans from their 401k or their 403b plans on the job, or that they've just outright taken loans from their retirement funds, which is another indication that they're using up their savings." The author referenced financial experts who attribute this to the rising costs of groceries, rent, electricity, and gas. Well, ladies and gentlemen, earlier I said at some point this could become unsustainable. In my opinion, the same holds true for those who are tapping their 401k or 403b accounts. What do these people do once they have spent all that retirement money and maxed out their credit cards? I guess some could resort to buy now, pay later loans, which are becoming quite popular these days for just about everything in life. There are a lot of companies making a lot of money from all of the interest earned from credit cards, buy now, pay later loans, and various other debt instruments. Companies are making this money on the backs of hard-working Americans whose wages have not kept pace with inflation in many cases. Now, this next bit of information will probably not surprise you, but the percentages may really get your attention. The author of the article said bank companies report a decline in deposits compared to previous years. JP Morgan saw a 3% drop in deposits. Citigroup, 5% in the personal banking unit. Wealth management units saw declines of 10% and as much as 31%. In my opinion, this really helps to paint a picture of what is going on here in our great country. I don't think any of this is a good sign for what is yet to come in our economy. If many people are no longer saving and they have resorted to using credit cards and also tapping their retirement accounts to survive, this may not bode well in the long run. What do you think about all this? Share your thoughts in the comment section below. On the topic of credit card debt, I read another interesting article today. This article was on AOL.com, put out by Scripps News, and written by Lauren Magarino, titled, "What's Behind America's Record-Breaking Credit Card Debt?" The author quoted Paulina Lykos of CNBC Business News as saying, "To increase borrowing costs, some Americans are falling behind on their credit card payments as their household budgets are being squeezed." Well, ladies and gentlemen, I am surprised we haven't heard more about Americans falling behind on their credit card payments. In my opinion, it may just be a matter of time before we really start hearing about this in the mainstream news. I believe we may reach a tipping point for some households in the near future. I'm going to share something with you that really stood out to me when I read this article. The author talked about how credit card balances hit a record high of $1.08 trillion according to the Federal Reserve Bank of New York's third quarter report, and by comparison, it reached about $1 trillion during the Great Recession in 2008. Anytime someone compares our current situation to 2008, I think we should at least take notice. I don't think this is a good sign at all. I'm sure someone in the comment section below is going to say that all this credit card debt is just fine because the number is only the highest ever on record due to inflation. If we adjust previous credit card debt records for inflation, this is nothing to worry about. In my opinion, there are a lot of indicators that point to what is really happening with many American consumers, and the signs really aren't positive in my opinion. Keep in mind that all of this credit card debt is being racked up during a time when we have sky-high interest rates. For some American households, this debt could snowball out of control and grow unmanageable very quickly. What do you think about all this? Share your thoughts in the comment section below. If credit card debt in America wasn't bad enough, there is something that many people aren't paying attention to that could potentially turn into a banking crisis in the future. There are still cracks forming in the commercial real estate market. I haven't heard much about this in the news recently, but this could still be a big problem for banks moving forward depending on how exposed they are. We saw what happened with the residential mortgage crisis back in 2008. I have to wonder if we could see a repeat of something similar with bad commercial loans moving forward. Hopefully, it won't be as bad as what we experienced back then with the residential mortgage meltdown. With that said, I have no doubt there are a lot of banks holding a lot of bad paper. Some of these commercial properties are worth far less than what is owed. I read an article today on Yahoo Finance put out by the Commercial Observer and written by Nick Trobola, titled, "Distressed West LA Office Building Sells for Half Its Pre-COVID Price." Before I get started, I want you all to know this isn't some old, rundown, dumpy office building in California that no one would want to rent. This is a modern and very beautiful 5-story office building. According to the author, Goldman Sachs last acquired the property for $92.5 million in August 2018, and apparently there was a $60 million loan from JP Morgan tied to the property. The property was sold for only $44.7 million to Harbor Associates in a joint venture with F&F Capital Group. These two companies acquired the deed from JP Morgan in lieu of foreclosure. The principal from Harbor Associates said, after several years of kicking the can down the road, we are now beginning to see distress hit the market. I found this to be very interesting. I wonder how many other distressed commercial properties are going to hit the market and how many will end up being significant losses for the financial institutions involved. Think about the size of the commercial real estate market and think about the value of these assets. Also consider the carrying costs for these assets. This really could become quite a mess for some banks to deal with. While commercial real estate in California may not resonate with many everyday Americans, this next story may be one to catch the attention of hardworking people who work entry-level jobs. This story is about something happening in California. I read an article on BusinessInsider.com written by Nancy Luna titled, "Pizza Hut Franchisees Lay Off More Than 1,200 Delivery Drivers in California as Restaurants Brace for $20 Fast Food Wages." According to the author, the Pizza Hut franchisees are reducing staff as fast food chains in the state brace for a new law that increases worker pay to $20 an hour in April. The author quoted a delivery driver who had been working for a Pizza Hut franchise for 9 years. The delivery driver said he was offered $400 severance pay if he stuck around through his February 5th layoff date. He said, and I'll quote, "The money they are giving us as severance pay is a slap on the face. It comes to $3 a month for 9+ years of service." Well, my heart goes out to these 1,200 drivers who may be laid off. This is terrible news for these people, many of whom I am sure have worked very hard to deliver hot pizza to customers in a timely manner. This is not always an easy job. In many cases, you have to fight traffic, deal with customers who may be upset if their pizza was not made correctly, and sometimes you may have to deal with dangerous situations at the delivery address, such as a vicious dog. I hope these people are able to find new employment opportunities quickly. When politicians make decisions, there are often ramifications, and raising worker pay to $20 per hour is a perfect example. This is also a perfect example of why it is so important to have an emergency fund to rely on in case you get laid off. In my opinion, people should always invest in themselves and continue learning new skills so that they are prepared to find employment in a variety of different occupational areas in the event they ever need to do that. Please keep in mind that everything in this video is for entertainment purposes only, and nothing in this video is financial advice or advice of any kind. If you need advice, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider subscribing to the channel. Please also consider sharing this video with your friends. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. Check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.